Hi students. So coming to the GST amendment class, and this session is very important for those students who are going to write the exams in May or June 2025 CR CMA INTER. Okay. So just go through it once. So coming to the first amendment, so that is relating to the Schedule 3. Schedule 3 is nothing but those supplies which are neither considered as supply of goods nor considered as supply of services. And once the transaction covered under Schedule 3, it is not liable for payment of GST. And there are some list of transactions are there which are covered under Schedule 3. One of the point is actionable claims other than lottery tickets, betting and gambling are covered under Schedule 3. So those are not liable for payment of GST. Now, the lottery tickets, betting and gambling is replaced with specified actionable claims. And specified actionable claims are nothing but what? Betting, gambling, lottery tickets, horse racing, casino, and online money gaming. So, other than these are only covered under negative list. Means, so unsecured debtors and right to receive the amount from insurance or bills of exchange, promissory note, or bearer checks. So these are only covered under negative list. So specified actionable claim is an exception to the negative list. So that is covered under the purview of GST, and these transactions like betting, gambling, lottery tickets, horse racing, casino, and online money gaming are taxable for GST at higher rate like 28%. Okay, and coming to the second one, supply of food or beverages at cinema hall. And here the key point is, and for example, you purchase the movie ticket and went to the movie, and either before starting the movie or during the break, and you purchase the food or beverages like snacks, you purchase chips, you purchase nachos, you purchase drinks, you may purchase ice cream, you purchase whatever may be, and you have it. But the question is, shall we consider that supply of food or beverages at the cinema hall as a separate supply, or will be forming part or integral part of the cinema exhibition service? Purely depends upon how we purchasing that food or beverages. So just imagine, and where the sale of cinema tickets and the food and the beverages and both are provided as a combo, and both are provided as a combo together. In that case, it is treated as a bundled supply and is satisfying the features of composite supply. In case of composite supply, the principal supply will play the key role. And here the principal supply is nothing but what? Cinema exhibition service. The whole amount is treated as a cinema exhibition service and accordingly we taxed. Second scenario, you purchase the movie ticket only and you went to the movie. In the break time, you go to the stall and purchase the food or beverages by paying some extra consideration. Shall we consider it as a integral part of cinema exhibition service or a separate service? Means it is treated as a separate taxable service and is considered as a restaurant service. So when we consider it as a restaurant service, only if those are supplied, and that supply should be independent of cinema exhibition service. Cinema exhibition service. So if you are purchasing the food or beverages as a part of the combo, then it is covered under cinema exhibition service. Otherwise, it is treated as a restaurant service and is taxed accordingly. Okay. And so coming to the third one. So the applicability of GST on location charges or preferential location charges collected along with consideration for sale or transfer of residential or commercial properties. Residential or commercial properties. For example, while purchasing the residential commercial properties, if you are purchasing these properties before receiving the completion certificate, it is treated as a supply of service. Or after receiving the completion certificate or the date of first occupation, whichever is earlier, then it is not a supply covered under negative list, nothing but schedule 3, and not liable for payment of GST. So here we are talking about before receiving the completion certificate. Okay. And second point is preferential location charges or location charges means, so while purchasing the plots, when the apartment is under the construction and some parties requesting the builder to give an east facing apartment or east facing flat, and some parties are requesting to give west facing, or some parties are requesting to give which is having a best side view sightseeing place. So in this way they are having some preferential locations, and those preferential locations are generally having the high prices, and builder is also quoting the high prices, and that additional amount is treated as a preferential location charges. But remember that preferential location charges are not collected by the builder or contractor separately in addition to the supply of a construction service, and those are forming part of that construction service itself, and is it treated as a composite supply. And in case, as we discussed, in case of composite supply, the principal supply is playing the key role. Here, the principal supply is nothing but what? So, supply of construction service, and accordingly, we have to tax it. So, here, the supply of construction service is the main service, and PLC is naturally bundled with it and eligible for same tax treatment as a main supply of construction service. And only when the PLC is forming part of construction charged for supply of construction service before issue of completion certificate. If the PLC is collected as a part of the consideration for purchase of any plot in the apartment after getting the completion certificate, then it is also forming part of composite supply, but it is forming part of the schedule 3 under negative list and is not liable for payment of GST. Okay. Next, one of the important amendment, so that is relating to the warranty. So applicability of the GST in respect of warranty replacement of the goods or its parts or repair services during the warranty period. And generally what happened in case of warranty, first manufacturer sell the product to the distributor, and the distributor sell it to the customer, and they provide the warranty. And during the warranty period, you may get the repair services at the free of cost. So, but the service center didn't collect any service charges from the customer, but the service center collected the amount from the manufacturer. Collected the amount from the manufacturer, and that is also treated as a consideration. But for the service center, he didn't collect from the customer, even single rupee didn't collect. So here the question is, whatever the replacement parts they used, replacement they goods or any parts they used while providing the repairing services during the warranty period, how they are taxable. How they are taxable. And here some scenarios are there, some cases are there. Who is providing that warranty? So the first scenario is nothing but the original equipment manufacturer offering the replacement of goods or its parts, repair services under warranty period to the customer. And here the warranty is provided by the main manufacturer or original equipment manufacturer. In that scenario, so here we purchase the goods, we purchase the equipment from the distributor or from the retailer. And any repair we have, we went to the service center and we get that repair service. But as it is covered under, as it is under warranty period, service center didn't collect even single rupee from you, but they charge the amount from the manufacturer. Then for that amount, no tax is levied because as it is provided by the service center to you at a free of cost. At a free of cost. For example, for example, I purchased the bike and I went to the service center for general service. They provide the general service. But so before went to the general service and one of the part has been damaged and which is not covered under the warranty. Then during the general service, they provide the total general service and also they replace that damaged part. Then service center collect only the amount for that damaged part from me because the damaged part is not covered under warranty. And for the remaining services they provide, they didn't collect it from you. So they collect it from the manufacturer. And here two elements are provided by the part 2 to you. One is at free of cost, which is not liable for payment of GST as no consideration is there. And the second one is any additional consideration collected by the party for providing the service or supply of the goods that is always taxable under GST. Okay, so the value of original supply of goods provided along with warranty by the manufacturer to the customer includes the likely cost of replacement of the goods or its parts or repair of services to be incurred during the warranty period on which tax would have been already paid at the time of purchasing of the product itself. Since no further GST is chargeable on that case. But however, if any additional consideration is charged, any additional consideration is charged by the manufacturer from the customer, then GST will be payable on that additional consideration. GST will be payable on that additional consideration. Understood? And second one, if the distributor provides the warranty replacement or repair services to the customer on behalf of the manufacturer. The distributor providing the warranty replacement on behalf of the manufacturer. But the question is whether that party is providing that warranty replacement out of his purchases and later he collected from the manufacturer, or the second one is that party make the raises a requisition to the manufacturer and after getting the product from the manufacturer they provide the services replacement warranty services to you, or that party is already have the product which was received earlier from the manufacturer and those are used for providing the warranty service. These three scenarios are there. First one, distributor replace that goods or providing that service by using his own stock or out of his own purchases, and later he raise a tax invoice and send to the manufacturer. In that scenario, on the tax invoice raised by the distributor to the manufacturer. So distributor raise a tax invoice to the manufacturer and this is liable for payment of GST. That is liable for payment of GST. And second one, second scenario, distributor raised a requisition to the manufacturer. First of all, customer went to the service center and the service center said and some products we required for providing these replacement of these goods. Then, and after intimating to the customer, they send the requisition to the manufacturer. Then manufacturer send that goods or parts, so which are required to be replaced to the distributor. Then distributor will replace it. Here, the distributor didn't raise any tax invoice to the manufacturer. So that's why no GST is payable on such a replacement of goods or its parts by the manufacturer, because it was already promised by the manufacturer for providing these warranty replacement of the goods at the time of original purchase, original sales. Okay. And third one is distributor distributor already get the respected product from the manufacturer on by using the delivery chalana, by using what, the delivery chalana. So, and after getting the respected activity, he provide the warranty service. And here the distributor replace its goods or its parts to the customer under warranty by using his stock, and then raise a requisition from the manufacturer of the goods or parts. So, sorry, this is also the first part, first point. But in the first point, distributor raise a tax invoice to the manufacturer. But here the manufacturer then provide the said goods or parts to the distributor through what? Delivery chalana. Through the delivery chalana, without separately charging any consideration at the time of replacement. So here no separate consideration is there. So no GST is payable on such a replenishment of goods or the parts, as it is under the delivery chalana. No separate consideration is there. And the fourth one is the distributor replaces the goods or its parts to the customer under warranty out of the supply already received by him, or out of the supply already received by him from the manufacturer. And the manufacturer issues a credit note in respect of the goods or its parts so replaced, subjected to the provisions of section 34. In that case, what they do? Accordingly, the tax liability may be adjusted by the manufacturer, subjected to the condition that such a distributor has reversed the ITC availed against such goods or parts thereof. So the tax liability is collected, adjusted. Tax liability is adjusted. First, manufacturer collect the amount from the customer at the time of original sale. On that portion, he collect the GST. And relating to the respected warranty replacement parts, that products are sent by the manufacturer to the distributor. Accordingly, the tax liability is also collected, adjusted. And whatever then distributor get the products at free of cost, and those products are used for replacement of the any damaged products are there under warranty period when the customer reaches the distributor. In that case, the distributor is required to reverse the input tax credit if he was already claimed on the respected warranty products. If he was already claimed, he has to reverse it. Okay. So, in case of a distributor providing the warranty service on behalf of the manufacturer, in this scenario, we have the four cases. One is distributor providing the replacement parts out of his own stock and raise a tax invoice to the manufacturer at later point of time. Then, while raising the tax invoice, GST would be collected. Second one, distributor replaces the respected goods or the respected parts. So during the warranty period, and send a requisition to the manufacturer. Then manufacturer supply the products under delivery chalana. Here no tax invoice raised by distributor. Then no additional consideration is there. No GST is liable to pay. Third one, distributor raised a requisition to the manufacturer for the goods, so which are required to be replaced. Then manufacturer send the respected goods. And here also no additional consideration is collected as it is covered under warranty period. So no GST is payable. Okay, no GST is payable. And coming to the fourth one, distributor replace the goods or its parts out of the supply already received by him from the manufacturer previously. In that case, so while sending the goods by the manufacturer adjusts the tax liability accordingly, and the later while using the products by the distributor for providing the warranty replacement, then they have to reverse the input tax credit to the government if it was already claimed. If it was already claimed. Okay. So this is the relating to second one. And the third one of the important point, if any extended warranty is there. If any extended warranty is there. And first, coming to the extended warranty is provided by the manufacturer or by third party. Or by third party. For example, you purchase the laptop, HP laptop you purchased. Then HP providing 1 year warranty for the desktop or any damages you have. And you purchase the respected product in Bajaj Electronics, then Bajaj Electronics is providing an additional warranty. So additional warranty for 2 or more years. For example, the 3 years more warranty they provided. For that purpose, they collected some additional consideration. And here, purchase of the HP laptop is one thing, and any warranty provided by the manufacturer for one year, that is covered under the laptop value only. But whatever the additional amount you paid for getting the extended warranty for more period, which was provided by Bajaj Finance, so which was provided by Bajaj Electronics, and that is considered as a separate supply and is taxable accordingly. And is taxable accordingly. Okay. And another one, for example, if the extended warranty is provided by manufacturer himself, extended warranty provided by manufacturer himself, but the question is, at the time of supply or after supply? After supply. For example, I purchased the HP laptop, and at the time of purchasing, they providing me warranty card also, and as per the warranty, so they provided 1 year warranty to me. If any damages incur, then I will approach, I have a right to approach the HP service center. They will do it. Then 1 year over, 1 year over, and no warranty I claimed. After completion of the 1 year, and one representative called from the HP, and they said, sir, 1 more or 2 or 3 years, some extended warranty is also provided on the product you purchased 1 year back. So that is treated as, and means you are getting that extended warranty after supply of goods or service, after supply of goods, not at the time of supply of goods. If it is provided at the time of supply itself, if it is provided at the time of supply itself, it is treated as a composite supply. It is treated as a composite supply and is charged as a part of supply of goods. Because in case of composite supply, the main activity, the principal supply is playing the key role. But if you are getting the respected extended warranty after supply of the goods, it is treated as a separate supply, and accordingly it is taxable. Accordingly, it is taxable. Okay. So in case of extended warranty, you have to think only the 3 points. One is, if the extended warranty is provided by the third party, whether at the time of supply or after supply of the goods, any extended warranty provided by the third party is always treated as a separate supply and is taxed accordingly. Second one, if the extended warranty provided by the manufacturer at the time of supply itself, then it is treated as a bundled supply and is satisfying the conditions of composite supply, and the principal supply is liable to pay. And it means the whole supply is treated accordingly, principal supply. Here the principal supply is supply of good. So it is forming part of the value of that good. And third scenario, if the extended warranty is provided by the manufacturer but after supply of the goods, And then relating to the extended warranty, no condition exists in so original contract or original warranty agreement. So the fresh agreement they wanted to enter after 1 year, after 2 years, they called to you and wanted to provide some extra warranty to you. Then it is treated as a separate supply, even though it was provided by the original manufacturer. Okay, so that is the next one relating to the warranty period. Okay, I hope you understood. And next, coming to one of the important point, very important point. So services by way of renting of the residential dwelling. So renting of residential dwelling for use of the residents, for use of the resident. What is the previous exemption list we have? The services provided by way of renting of residential dwelling for use of the residents, except where that residential dwelling is rented to a registered person, are exempted under GST. Are exempted under GST. Okay. Okay. So services by way of residential dwelling. Residential dwelling. So for example, supplier and the receipt. Supplier is a registered person. Recipient is a unregistered person. Supplier is a registered person. Recipient is an unregistered person. Then, and the purpose is residential purpose. Then it is exempted and is not taxable. And the supplier is a registered person, and recipient is also a registered person. Supplier is a registered person, recipient is a registered person, and the purpose is for residential purpose. Then it is a taxable under what? Reverse charge mechanism. And if the supplier is a unregistered person, recipient is a registered person, and it is meant for residential purpose, and it is also taxable under the RCM. It is also taxable under the RCM. Okay. So here the services by way of renting of residential dwelling for use as a residence, except where the residential dwelling is rented to a registered person. Except this activity, the remaining, you are providing the renting of residential dwelling for residential purpose is exempted. For example, if the residential dwelling is provided for the use of commercial purpose, that is taxable. That is taxable. And coming to the next one, here one exception is there where the residential dwelling is rented to a registered person. In that scenario, you have to verify. You have to verify whether registered person, and it means recipient, is considering that rental charges as his business income or for using the respected premises for his commercial purpose, for the his office purpose. In that scenario, how to consider? So here the services by way of renting of residential dwelling to a registered person is also exempted only when the registered person is the proprietor of the proprietorship concern and rents the residential dwelling in his personal capacity for use as his own residence. As his own residence, and such rent is on his own account and not that of the proprietary concern. Is that own account, not that of the proprietary concern. So nothing contained in this entry shall apply to accommodation of the services for students in student residences and accommodation services provided by hostels, camps, and paying guest accommodation sets, paying guest accommodation, and the like, etc. So, what we'll do? For example, I gave the one exercise here and here. Say the landlord is an unregistered person and tenant is also unregistered person. So first of all, it is not a taxable supply and it is exempted. First of all, not a taxable supply. Both are unregistered person. Landlord is an unregistered person. Tenant is a registered person. If the recipient is a registered person, then verify whether that party is using that residential dwelling for business purpose or for residence purpose. Business purpose or for residential purpose. If it is meant for business purpose, that is the taxable. If it is meant for business purpose, then that is a taxable. That is a taxable. If it is meant for residential purpose, then you have to think whether that rental charges are considered by the party as a business expense or not. As is business expense or not, we have to verify. And here, if the landlord is an unregistered person, tenant is a registered person, and that is provided to the proprietor, who means the rent paid is claimed as his business expense. Rent paid is claimed as his business expense. So then it is a taxable under GST. It is not exempted, it is taxable under GST and is liable for GST under what? RCM. Under what? RCM. And another one, if the supplier is a unregistered person, recipient is a registered person, and he took the respected premises on his personal capacity for his residential purpose. So this is exempted. This is exempted. This is an exception to the taxable case. So it clearly stated, if the proprietor took the respected building or premises on his own capacity or in his personal capacity, that too for his residential purpose is exempted. And if the person, if he took the respected premises in his personal capacity for running his own business, then it is taxable. Then it is taxable under forward charge, not under reverse charge. Okay. So if it is meant for residential purpose, then only it is covered under RCM. And third one, supplier is a registered person. Recipient is a registered, both are registered persons, and renting of residential dwelling. Proprietor is using the building for residential purpose only, but the rent paid is treated as a business expense. Means he is not taking the respected premises in his own capacity. He took the premises in the proprietor capacity. So then it is taxable under what? Reverse charge. And for example, if the rent paid is not claimed as business expense, means he took the respected premises in his own capacity, then it is exempted, not liable for payment of GST. Next, if the registered person providing the premises to the unregistered person, so by way of providing or renting of residential dwelling, but the party used it for commercial purpose, means he using for his office purpose, then it is taxable under what? Forward charge. It's taxable under what? Forward charge. And if both are registered person and the premises is using for commercial purpose, if it is used for commercial purpose, always it is a taxable under forward charge only. If the both are unregistered person, first of all, it is not a taxable case. If it is not a taxable, whether it is meant for residential purpose or whether it is meant for commercial purpose, it is not a taxable case. Okay. So this is the point we have. Okay. So what? Services by way of renting of residential dwelling for use as a residence is exempted, except what? Where the residential dwelling is rented to a registered person. So if the any residential dwelling is rented to a registered person, that is taxable under reverse charge mechanism only if that recipient took the respected premises in the proprietor capacity. and the rent paid is treated as a business expense in their business. Otherwise, if the recipient took the premises in his own capacity, he is not considering the rent paid as his business expense, then it is also exempted and not liable for payment of GST. Okay. And one more point we have relating to the commercial plots. Okay. So relating to the commercial plot. And before that, here, hmm, here the commercial plot. Services by way of renting of residential, sorry, this is not. Hmm, Here, a new reverse charge entry has been inserted with effective from 10th October 2024, which further provides that services provided by way of renting of any immovable property other than residential dwelling. So he clearly stated what? Other than residential dwelling. What is meant by other than residential dwelling? Simply a commercial property. Simply a commercial property. So it is charged under reverse charge only if the supplier is an unregistered person. The supplier is a unregistered person, recipient is a registered person, and so transaction is a commercial property and a renting of commercial property, then it is taxable under RCM. If the supplier is unregistered person, recipient is unregistered person, commercial property is providing on rental basis, it is not taxable. And supplier is a registered person, recipient is a registered person or unregistered person. Supplier is a registered, but recipient is either registered or unregistered, and commercial property is providing on rental basis, then it is a taxable, but on what basis? Forward charge mechanism. Forward charge method. He clearly stated these two conditions has to satisfy. Supplier is unregistered person, recipient is a registered person, and the renting of commercial property. So that is covered under reverse charge mechanism. Okay. Next. And here one more point we have. One of the important point we have. A new exemption entry 12A has been inserted in notification number 12 2017 city says under with effective from 15/7/2024. What it says, the supply of accommodation services having a value less than or equal to 20,000 per person per month, and said accommodation service was supplied for a minimum continuous period of 90 days. And actually, this section, this provision was inserted for the purpose of hostels or PGs. So, which are meant for providing what? Accommodation services. Accommodation services. If they are collecting, so rent of per a person, 20,000 per person per month, 20,000 per person per month. But the minimum period of accommodation is how much? 90 days. So this is a under condition. This is a under condition. And both the conditions are required to be satisfied. Then only that is exempted. Then only that is exempted. For example, 19,000 per month per person. 19,000 per month per person. And that party took it for 60 days. Is it exempted? No. It is a taxable. It is a taxable. Okay. So, for example, 19,000 per month per member, per month per member, plus he took the premises, he took the room for 5 months. Is it taxable or not? No, it is exempted as both conditions are satisfied. It is under condition. So the rent supply of accommodation service having a value less than or equal to 20,000 per person per month, and said accommodation service was supplied for a minimum continuous period of 90 days. For example, if the party so came to the Vijayawada and it took the premises for 1 month, and he vacated at the end of the January, and again he came in the month of March and he took the premises for 1 more month, and he vacated in the month of March again. Again he came to the Vijayawada in the month of June and he took it for 1 month. In that way, so during the total year, for 90 days he took. Shall we consider it or not? No, it is not accepted. He clearly state a continuous period of what 90 days is required. A continuous period of 90 days is required. Okay. For example, and accommodation service. For example, room rent is 25,000 per member per month, and he took it for 100 days. Is it exempted or not? So, as it is, so sorry, it is not exempted. It is a taxable. How much amount is a taxable? The total 25,000 is a taxable. Total 25,000 is taxable into how many months we have? The total 25,000 is taxable. Okay. And next, one of the important point, when the food, internet or other amenities are provided incidental to the room or a unit accommodation, so those are providing as a part of the accommodation, then it is treated as what composite supply. In that case, the total value of the supply is treated as a accommodation service, because the main activity principal supply is providing what accommodation service. So the total value is treated as accommodation service, and the value is verified as it is less than or equal to 20,000 or not. If it is less than or equal to 20,000 and he took it for minimum period of 90 days, then it is exempted. Otherwise, it is taxable. Okay. And further, it is clarified and it is provided on what basis? As is where is basis. Means it is provided on retrospective basis. Means it is applied. Even though it was provided in 2024, it will came into the force and into the effective from 1/7/2017 onwards. So, if any arrears are there previously, for example, coming to the previous period relating to the one party, any arrears are there, now those are exempted, not liable to pay tax if it is satisfying the condition. Means the party's rent is less than or equal to 20,000 per month per member, and he took the building premises for a minimum period of for a minimum continuous period of 90 days, then it is exempted. Otherwise, it is taxable. But remember, if any tax they paid previously, those are not required to be refunded. No refund option is available. Clear? No refund option is available, is indicated for taxpayer who paid taxes in past years relating to that. Okay. But for those who didn't pay the tax, who in the past are given relief of exemption. Similarly, those who paid taxes should eligible for refunds without the tax. Okay. So accommodation services which are applied in case of hotels. So providing the accommodation services, and these generally applied in case of hostels, PGs and student rooms, etc. If the accommodation services provided whose value is less than or equal to 20,000 per person per month, and the minimum period that service is supplied for a minimum continuous period of 90 days, then it is exempted. Otherwise, whole amount is taxable. Okay. And already residential dwelling was completed and the commercial plot is also completed. Okay. Next. This is about the supply. And coming to the next one, and one of the important area, all new exemptions are very, very, very important. Okay. First, services provided by Ministry of Railway, Indian Railways to individuals by way of sale of platform tickets and facilitating of facility of renting the rooms or waiting rooms, clock room services, and battery operated car services. These are exempted, and previously these are taxable. Previously, these are taxable, and now the exemption is provided in this list. Okay, so services provided by Ministry of Railways to an individual by way of sale of platform tickets, facility of renting the rooms or waiting rooms and clock room services, battery operated car services are exempted. And next, coming to the next one, services provided by one zone or a division under Ministry of Railway to the another zone or another division under the Ministry of Railway, including train operations, rake operations, coach operations, and personal services, as well as maintenance and repairs of rolling stock, etc. These are also exempted. And it means just one zone is providing the service to another zone. So these are exempted now and is not taxable. And is not taxable. Next. And next, coming to the electricity. Previously, in case of electricity, only the services by way of transmission or distribution of electricity by electricity transmission or distribution utility is exempted. This is the previous provision. And coming to the amendment, along with the transmission of electricity or distribution of electricity, some more activities are also exempted. Nothing but supply of services by way of providing the metering equipment on rent, testing for meters, transformers or capacitors, and application fee for providing the electricity connection and releasing the electricity connection, shifting of meters, service lines, issuing the duplicate bills, etc., which are incidental or ancillary to the supply of transmission or distribution of electricity by transmission or distribution of utilities to their consumer. And these all services now are exempted, and previously those are taxable. Previously, those are taxable. So, metering equipment on rent, testing for meters, transformers, and capacitors, application fee for providing the electricity connection, releasing the electricity connection, shifting of meters or service lines, issue of duplicate bills, and supply or distribution of transmission or distribution of electricity. These are exempted and not taxable under the purview of GST. Okay. Next. Next, the GST Council recommended to exempt the supply of research and development services by government entity, R&D services by government entity or research association, universities, colleges or any other institutes notified under clauses 2 or 3 of subsection 1 of section 35 of Income Tax Act using the government or private grants is exempted. Is exempted. Okay, and any R&D services provided by government entity in return for receiving the grant. Any R&D services provided by research association notified under section 35 of IT Act, any university or colleges or other institutes covered under section 35 of Income Tax Act. So in return for getting the government or private grants, those are exempted. Whatever the grant you receive, and these services are exempted. And as we said, these are also provided on what basis? Retrospective basis. And previously, though, if any arrears are there, and further, no tax is liable to pay. Okay. So next, coming to the 10th one. Services of affiliation provided by central or state educational board or council or any other similar bodies by whatever name called to the schools established, owned or controlled by the central government or state government or union territory or local authority or government entity. So if the board, it may be a central government or a state government or council or any other similar body, whatever may be, it is providing any affiliation services to the government schools. To the government schools. What is meant by affiliation services? Affiliation services is relating to what having the ground and having the faculty strength and having the facilities and having the facilities etc. They will provide some ranking to the respected school, and that affiliation services provided by the government related or government boards to the government schools are exempted. If affiliation service is provided to the other schools, these are taxable. Affiliation services provided to other school is taxable, and government schools are exempted. So here clearly stated, in case of services of affiliation provided by central or state educational board or council or any other similar body by whatever name called to other schools. So here not covered under this exemption means it is taxable. Okay. And one more important point they stated, it has been clarified by CBIC that affiliation services provided by universities to their constituent colleges are not covered within the ambit of exemptions provided to the educational institutes. Thus, such services are taxable. That means what? So, and in case of majority degree colleges, we saw one word. So, affiliated under Krishna University or affiliated under Nagarjuna University, etc. If any affiliation services provided by the universities to the colleges covered under the respected universities, and those are not covered under exemption, those are taxable. Those are taxable in the case. Okay. Only affiliation services provided by central or state educational board or council or similar bodies to the government schools are only exempted. Even other schools are also taxable. Okay. Next. And any services provided by NSDC set up by Government of India. So National Council for Vocational Education and Training, an awarding body recognized by National Council for Vocational Education and Training, an assessment agency recognized by National Council for Vocational Education and Training, a training body, Excel accredited with awarded body recognized by National Council for Vocational Education and Training. NSDC and National Council for Vocational Educational Training, awarding body, assessment agency, and training body are created under the respected bodies of National Council for Vocational Education and Training in relation to what? NSDC programs or any other scheme implemented by NSDC or vocational skill development courses under National Skill Certification and Monetary Reward Scheme or any national skill qualification framework, aligned qualification, skill approved by National Council for Vocational Education and Training as a part of qualification package, and these are newly inserted and exempted and not liable for payment of GST. And previously, these two services provided as a part of skill development program, and those are also exempted, and there is no change in these entries as of now also come under exemption. Okay. And the last one of exemption list, reinsurance of exempted insurance scheme will also be exempted. Reinsurance. So, under retrocession means insurance transaction whereby the part of assumed reinsured risk is further ceded to another Indian insurer or cross-border reinsurer. It clarifies that the term reinsurance also includes what? Retrocession services. For example, you took the insurance from LIC and for 100 crore, and LIC took the insurance on the respected 100 crore policy from the ICICI. Then the insurance taken by one insurance company on the from the another insurance company on the existing policy is called as what? Reinsurance. And those are exempted. Reinsurance of exempted insurance schemes will be exempted and not liable for payment of GST. Okay. And coming to the GTA, there is no amendment relating to GTA, just a clarification is provided. If any intermediary or ancillary services provided by GTA in the course of transportation of the goods by road, then you need to check whether those are providing as a package or not, and those are covered under bundled supply or not. Then if it is S, then if it is a forming part of the composite supply, then the principal supply is nothing but what GTA. That intermediary ancillary services are also forming part of the GTA services, and accordingly we have to tax it. Either it is covered under exemption or reverse charge. Simply we consider it as a GTA service. If intermediary and ancillary services are provided as a separate service, and transportation of goods by road is providing as a separate service, then so whatever the intermediate ancillary services provided are considered as a separate supply and taxed it accordingly. So generally we apply what 18% rate of GST. Okay. Next, time of supply. Relating to what? Time of supply. So here the clarification of the time of supply of service under hybrid annuity model contracts. What is meant by hybrid annuity model contracts means the contract covering the construction and maintenance of the national highways. It covers both construction as well as the maintenance of the national. Both are covered. That's why we considered it as a hybrid annuity contract. Hybrid annuity model contract. So in that case, the question is, in hybrid annuity model, contract for construction and maintenance of a national highway by the National Highways Authority of India, which involves staggered payments over time. How is the time of supply determined for GST purpose? How we considering the time of supply? Generally, in this scenario, and first of all, is it a service or it is a supply of goods? So generally, it is a composite supply. First of all, the both construction of highways and operation and maintenance of highways both are covered under single contract, and those are provided as a package. So those are treated as what? A composite supply. Those are treated as what? Composite supply. And in that case, first of all, it is a service. So how the invoice is raised? So invoice is raised on or before the specified date, on or before specified date or completion of that event. What is meant by specified date? And it means so the date notified as per section 31 of CGST Act 2013, time of issue of invoice. The last date for issue of the invoice is notified. If the invoice issued within that time notified as per section 31, then time of supply is date of invoice or date of receipt of payment, whichever is earlier. Date of invoice or date of payment. For example, if it is not issued within the time stated as per section 31 or before completion date, then the time of supply is date of completion of that service, nothing but provision of service or date of receipt of that payment. Date of completion of that service or date of provision of service or date of receipt of payment, whichever is earlier. So if the invoice is issued on or before the due date, then date of invoice or date of payment, date of receipt of payment, whichever is earlier. If the invoice is not received, not issued before the due date, then time of supply is date of completion of the supply or date of receipt of payment, whichever is earlier. Okay. Then further, installments or annuity paid by NHAI to the operator includes the interest component, but that interest component is also be taxable. So and is covered under value of the supply for the purpose of GST. So because it was mentioned if any delays are there and that how the installments paid and whether interest included or not, those are already mentioned in the contract itself. At the time of entering into the contract itself, we have. That's why it is forming part of the value of for the supply and is liable for payment of GST. Okay, next. This is relating to the place of supply. Place of supply. And here, for example, if the unregistered person purchasing the one product through the ECO, electronic commerce operator, and there the billing address is in AP and delivery address is in Telangana. Billing address is in AP. Delivery address is in Telangana. In that scenario, what is the place of supply? Is it a billing address or a delivery address? So in this case, he clearly stated, when the unregistered person purchasing the product, the place of supply of the respected good is always will be as per the delivery address, as per the address of the delivery. The place of supply for goods will be address of delivery recorded in the invoice. Therefore, for the given scenario, place of supply in state where the mobile phone is delivered. For transactions involving goods to an unregistered person with a different billing address and different delivery addresses, then supplier should record the delivery address as the address of the recipient on the invoice for determining the place of supply. So, for example, if the billing address and delivery address both are different, then delivery address will be the place of supply. Okay, next. So this is relating to time and place of supply. And next one, registration under GST. And so first of all, we have section 29 and the section 30. Section 29 is relating to the cancellation of a GST, and section 30 is nothing. After getting the cancellation order, the person have the option to apply for revocation of cancellation of that order. And he has to apply within 90 days from the date of getting the cancellation order, and further it may be extended for another 180 days. That is the another case. So for example, you get the cancellation order. Cancellation or date of cancellation order is 1/10/24, and you applied for revocation, and proper officer feels that, and that party is showing the genuine reasons, and he wants to revoke it, and the revocation order is provided by the party on, for example, 1/1/25. Date of revocation order is provided, and it means during this period you are not a registered person, you are not liable to file any return to the department. But after 1/1/2025, again you became a registered person. Then the question is it required to file the returns relating to this period in between date of cancellation and date of revocation of that cancellation order? So during this period you didn't file, but after getting the revocation order, you became the registered person and you are able to file the returns. Is it required to file the returns during this period or not? Yes, you have to file. And you need to file the return within how many days? 30 days from the date of revocation order received. From the date of revocation means you get it on 1/1/2025. So means on or before 1/2/2025, you have to file the returns. You have to file the return. For example, sir, I didn't provide any supplies. I didn't do any activity during this period. Even though you have to file a nil return. You have to file the nil return within 30 days from the date of order of revocation of registration. So if I fail to file the return within 30 days, what they do? Here is the clause. A new clause is inserted to provide that registration can be cancelled if the person does not file the pending returns within 30 days from the date of order of revocation of registration. If you are unable to file the returns within 30 days from the date of revocation of that order, your registration is to be cancelled. Will be cancelled. Okay. Next. Metal scrap. This is one of the important points we have. Okay, metal scrap. And first of all, the person who are only engaged in making of supply of taxable goods or services or both which are covered under reverse charge mechanism are not required to get registration under section 23 of CGST Act 2017, and that is actually stated. So for example, supplier, recipient is there. Supplier is providing the taxable supply covered under RCM. Covered under RCM. In that case, recipient has to get the registration under section 24 of CGST Act 2017. Nothing but mandatory registration, compulsory registration. For example, if the party exclusively involved in this supply, then he is exempted from registration under section 23 of CGST Act 2000. So it is not liable for registration. But in case of metal scrap, in case of metal scrap, remember supplier, recipient, supply of metal scrap, supply of metal scrap is covered under reverse charge mechanism, and the recipient is liable for GST under RCM. Recipient is liable for GST under RCM. But coming to here, supplier is not exempted from GST. So if the supplier supplying the metal scrap and is aggregating turnover exceeds threshold limit under section 23. If his aggregated turnover exceeds threshold limit stated under section 23, then so he is liable for registration under section 23. Once the supplier get the registration, then this transaction is liable for GST under forward charge mechanism. No more continued under reverse charge mechanism. So this transaction is covered under RCM only up to the supplier is continued as an unregistered person. But if the supplier, once they get the registration, then recipient is not liable to pay because RCM is going to stop and forward charge mechanism came into the picture. Supplier itself is liable to pay GST to the government. I hope you understood. Okay. So here, however, it has been amended to specify that this exemption shall not be available to any person engaged in supply of metal scrap. So means supply of metal scrap is required to take the registration if his aggregated turnover exceeds a threshold limit. Okay. And as I said, supplier of metal scrap is required to obtain registration under section 23 of CGST Act if aggregated turnover exceeds threshold limit. Till the supplier get the registration, who is liable to pay? Recipient is liable to pay under RCM. But once the supplier get the registration, then RCM will stop. Is liable on what basis? Forward charge mechanism. Who is liable to pay GST to the government? Supplier. Who is liable? Supplier. Okay. And this is relating to RCM and registration related cases. And relating to the metal scrap, we have a provision in TDS also. Section 51 of CGST Act. Actually, as per section 51, the following notified, this is the old provision we have first. Then after that, we'll discuss the amendment. As per section 51, following notified persons are required to deduct the TDS at what? 2%. Or 2% means 1% CGST and 1% SGST and 2% IGST. So from the payment made to the supplier. And it means if supplier is the any person, supplier is the any person, but the recipient is covered under notified supplier, notified persons. Recipient is the notified person. And as and when they are making the payment where the value of supply exceeds 2,50,000, then these parties deducted TDS at 1% CGST, 1% SGST, nothing but 2% or 2% IGST is required to be deducted, and the remaining amount only required to pay. Remaining amount only required to pay. But this TDS deduction is not applied. This TDS deduction is not applied when the goods and or services are supplied from PSU to the another PSU to the another PSU, and when the supply of goods or services takes place between one TDS deductor and to the another deductor. And here, for example, supplier and the recipient. Supplier is the anyone. A recipient is the notified person. Then notified means, so whatever the list provided here, those are covered under notified person. Then TDS will be deducted at 1% CGST, means 1% SGS, total 2%. If the supplier is a PSU and the recipient is a PSU, and supplier is a one of the notified person, recipient is also one of a notified person. Supplier is a PSU, recipient is a PSU, and supplier is one notified person, recipient is one notified person, then no TDS is deducted. No TDS is deducted. No TDS is deducted. This is the old provision we have. Okay. This is the old provision we have. So any services provided by the any supply provided by the one person to the notified parties where the value of supply exceeds 2,50,000, then while making the payment by that notified person, they have to deduct the TDS at 1% of CGST, 1% of SGST, or 2% of IGST. If that supply is made between two notified persons, two TDS deductors, or in between two PSUs, not required to deduct TDS. And here, one more amendment, and means to the notified persons list, one more point is added. any registered person receiving the supplies of metal scrap from the another registered person shall deduct TDS. And what they said, supplier, recipient. Metal scrap. He is a registered person. Already we discussed it previously. Once the supply of a metal scrap is covered under RCM, only till the date supplier is getting the registration. Once the supplier get the registration, it is not covered under RCM, it is covered under forward charge mechanism. So here, the supply of metal scrap by one registered person to the another registered person is covered under section 71. TDS is deducted at 1% CGST and 1% SGST or 2% IGST. If the supplier is a unregistered person, recipient is a registered person relating to the supply of metal scrap, then it is covered under RCM. Then no TDS is deducted while making the payment. No TDS is deducted. He clearly stated supplier should be a registered person. Recipient of that metal scrap also should be a registered person. That's why clearly mentioned what this provision is applicable only in case of forward charge mechanism. Okay. In case of reverse charge mechanism, this is not applied. Okay. This is not applied. Okay. And supplier is a registered person. Supplier is a registered person. And recipient is a unregistered person, and this is also covered under forward charge mechanism, but no TDS is deducted. Okay, so listen carefully, and one of the important point we have, and very important points we have this time, and we may expect minimum up to the 10 marks in the final exam. Okay, listen carefully. And another one, it has further provided that TDS shall be deducted by the recipient on the supply of metal scrap even when it is supplied between persons mentioned in the notification that authority, board, society set up by the government or local authority PSO, nothing but notified persons. Notified person. What it says, so supplier, recipient, if he is a notified person, he is also a notified person. Both are the notified person and the supply of goods. If the supply of metal scrap, then TDS is deducted. TDS is deducted. In case of supply of metal scrap between notified persons. Supplier is a notified person, recipient is a notified person. TDS is required to be deducted. If the supply is of other goods, no TDS is deducted because exception to section 51 of CGST Act 2017. Okay, so if the supply of metal scrap made between two registered, so two notified person, in that case, recipient is required to deduct what? TDS. Recipient required to deduct what? TDS. And how to deduct, how much percentage required to provide, and is provided in section 51. Okay, this is about what? Metal scrap. Okay, so to the notified person, one more list is added, nothing but any registered person receiving supply of metal scrap from the another registered person shall deduct TDS. And so here both are should be a registered persons. Both should be a registered person. Next. In case of TCS, actually there is no amendment. Only the amendment is change in rate. Previously, TCS is collected at 0.5% CGST or 0.5% SGST. In case of IGST, 1% is there. And now the TCS is 0.25% on net value of intrastate supply and 0.5% IGST in case of net value of interstate supply. This is only there is a change in rate. Only the amendment we have in TCS. Okay. Next. Provisions of biometric based Aadhaar authentication applicable to whole India. And what is this means? Actually, while applying for registration, and means we have to file what form GST REZ1, and while submitting, you need to opt. So Aadhaar authentication, you need to opt what Aadhaar authentication, and that Aadhaar, or else, for example, if there is a biometric based Aadhaar authentication is there, or second scenario, for getting the approval of the verification, approval of the respected document, you may take the photocopy of the applicant, and the original copy of the documents uploaded in the respected registration form and submitted at nearby facilitation center. And third one is physical verification of the premises of the applicant by the proper officer. Once the biometric is completed, generally physical verification is not done. And if the biometric is not possible, then you need to take the original copy of the documents you submitted while applying for registration along with photocopy and photograph and photocopies of that item, and you need to go to the nearby facilitation center and get the verification approval. And this biometric verification is mandatory previously in case of Gujarat and thereafter applied in case of Andhra Pradesh and Puducherry, nothing but Pondicherry. But now this biometric verification is a mandatory throughout India. It is applied for throughout India, not only for Gujarat and Andhra Pradesh and Puducherry. It applies to all states and union territories in India. Okay. Next. Additional compliance in case where the Aadhaar authentication is not opted. For example, and while submitting form GST REZ1, before submitting form GST REZ1, you get one verification point, and you want to opt Aadhaar authentication or not. Say yes or no. You may take either yes or no. You may choose the no also. If you choose the yes, then after submitting form GST REZ1, you get one link to your email ID or to the registered mobile number. Then through that link, you have to verify your Aadhaar and you have to get the Aadhaar authentication. Then after that, after getting the respected verification, they will sanction the registration to you. Second one, if you select the no, then what we do? Then applicant has to visit the nearby GST facilitation center by bringing the photograph of the applicant and original copy of the documents you uploaded while submitting the form GST REZ1. These are required to be bring by the applicant to the GST facilitation center and required to get verification there. After getting the verification, only the form GST REZ1 is said to be successfully done. Okay. And physical verification is completely different. Further, the requirement of physical verification by proper officer shall remains as it is. There is no change in that. If you select no for Aadhaar authentication, you have to do what you required to do. You have to bring the photograph of the applicant and original copy of the all documents you submitted while applying for registration. to the nearby GST facilitation center and get the verification. Okay. And next, in case of payment of tax. So, for example, if you deposit the amount in e-cash ledger, and if you deposit the amount in e-cash ledger, so before the due date, for filing the return, then so no interest is provided on the respected amount by the GST department. No interest is provided. Okay. So relating to the ITC. So clarification on time limit for availing the ITC under section 16(4) of CGST Act for in respect of RCM supplies. RCM supplies means what? Those supplies which are covered under section 9 of CGST, section 9(4) of CGST Act 2017. So where it is clarified that where the supplies are received, where the supplies are received from unregistered supplies, and tax is required to pay by the recipient under RCM, then the relevant financial year for calculating the time limit for availing input tax credit. What is the maximum time limit for claiming the input tax credit? That was stated under section 16(4) of CGST Act 2017. What it says 16(4)? 16(4) says the maximum time limit for claiming the input tax credit is nothing but 30th November of the following financial year, or the date of filing the annual return, whichever is earlier. So here we have that provision. So what it says, on or before 30th November of the succeeding financial year or date of filing the annual return, whichever is earlier, that is the last date. But the question is, the relevant financial year for calculating the time limit for availing the input tax credit is counted from the date of issue of invoice or date of receipt of service. It is counted from what date? Date of issue of invoice or date of receipt of services. So the answer is, we have to count, he clearly stated, and will be the financial in which invoice is issued by the recipient as per section 13. So date of issue of invoice will be considered. Date of issue of invoice will be considered, not the date of receipt of that supply. And if the recipient issue the invoice after the time of supply and pay the tax accordingly, then he is liable to pay what? Total tax along with interest for delayed payment. And the subsequent penal actions we have. We also have as per section 122. And it means wrong claiming of input tax credit, unlawful claiming of input tax credit, and their consequences are provided there under section 122 of CGST Act 2017. Okay. So if any supplies received from unregistered dealer, it is covered under RCM. It is covered under RCM. In that case, the last date for claiming the input tax credit is nothing but what? For any case, 30th November of the succeeding financial year or the date of filing the annual return, whichever is earlier. So here that date is counted from what date? Date of issue of invoice or date of receiving the service, means date of issue of invoice. So if any invoice issued, if any supply made by the party, or if any invoice issued by the party after the time of supply and pay the tax accordingly, then for delayed payment they need to pay the interest also to the department. Okay, next. Conditions for availing the input tax credit and ITC in case of cancellation and subsequent revocation. Okay, next. So listen it carefully. Section 129, as per section 129, on 1/10/2024, you get the cancellation order. date of cancellation order, and you receive the respected order also. From there, within 90 days, you may go for what? Revocation, and it may be extended for another 180 days also. And you went for revocation, and on the valid grounds, you submitted to the proper officer. Proper officer convinced and providing the revocation order on 1/1/25. Revocation order is provided on 1/1/25. Then, for the respected period, is it required to file the returns? Means during the period, not required to file the return, because during this period, in between 1/10/2024 and 1/1/25, he is not a registered person. But after getting the revocation order, he became a registered person, and after 1/1/2025, he may file the return, but within how many days? Within 30 days. From the date of revocation order, he has to file the return. He has to file the return. So this was already we discussed. But here the question is, if any input tax credit is there, ITC, what is the last date for claiming the input tax credit? As per section 16(4), it says 30th November of the subsequent financial year, or date of filing the annual return, whichever is earlier. That is the last date for claiming the input tax credit, right? For example, if the last date falls in this period, then is that party is eligible to claim the ITC after getting the revocation order or not? If the last date falls in between date of cancellation order and date of revocation order, because during the period that party is not eligible for claiming, not eligible for filing the returns, right? So not possible to claim the ITC also. Is there any option to extend the period? Previously, no. Previously, no. And that party not eligible to claim the ITC. Okay. So, but now that parties ITC can be claimed on or before 30th November of succeeding financial year, or date of filing annual return, whichever is earlier, and 30 days from date of revocation order. 30 days from date of revocation order. Okay. So this is very, very important. Okay. And another. So for example, if the last date for claiming the ITC was over before 1st 1/10/2024, it was over before 1/10/2024. What to do? No option to claim the ITC. So just we have to leave it. No option, because already it was over. Time period is expired. So not eligible to claim the ITC. And this provision is eligible only if the last date for claiming the ITC falls in between date of cancellation order and the date of revocation order, and then he can claim the ITC even subsequent to the revocation order, but before 30 days. Okay. So he clearly stated. So if the person's GST registration is cancelled under section 29 but later restored through section 30, either by appellate authority, tribunal or court order, they can claim the input tax credit for invoices or debit notes from the time before cancellation. So provided ITC was not restricted at that time. So the ITC not restricted means it was not blocked. The person can claim the ITC in the written under section 39 only if by November 30 of the following financial year before filing the annual return, whichever is earlier. And ITC can also be claimed for the period between cancellation date and the revocation order as long as the return is filed within 30 days of revocation order. And in short, ITC can be claimed up to the later of these two deadlines. Sorry, later of these two deadlines, not on or before. Sorry, at later date. At later date. For example, if the last date falls after 1/1/2025, then happy. So 1/1/20 after 1/1/25, nothing after 60 days from 1/1/25, then you can claim it accordingly. Okay. Hmm. Clarification relating to ITC and demo vector. So first of all, section 17.5. So what section 17.5 says, it is relating to the blocked credit. So simply said, if any motor vehicle used for transportation of used for transportation, so whose capacity is less than or equal to 13 persons, including whose capacity is less than or equal to 13 persons including the driver, then ITC was blocked. ITC was blocked. Here the question is, but there is an exception to that point. If that motor vehicle is used for further supply of the motor vehicles, further supply of the motor vehicle, or if it is used for transportation of goods, or if it is used for imparting the driving skills. So in these three cases, the blocked ITC blocked section is not applied. Section 75 is not applied. And in these three cases, you can claim the ITC. Coming to the demo vehicles. So demo vehicles are generally used by the party for demonstrating your vehicle to the potential buyer, and it is used for further supply. It is used for encouraging the buyer to purchase the product. So it is treated as a part of further supply. So restriction of claiming the ITC is not applied in case of demo vehicle. Not applied in case of demo vehicle. So that is clearly stated. Circular that ITC on demo vehicle is generally blocked under clause A of section 17.5, which restrict the credit of motor vehicle used for passengers transport up to 13 seats unless they use it for specific purpose such as further supply, passenger transportation, driving, imparting the driving skills, etc. Training program. And here, generally demo vehicles are used to promote the sale of similar motor vehicles. So they can be considered as a part of what further supply of motor vehicles. So ITC is allowed, not blocked under section 17.5. And ITC is not available if the demo vehicles are used for other purposes. So when ITC is not allowed, if the demo vehicles are used for transportation of this stuff and merely for marketing services where the dealer act as a agent. Okay, if it is meant for another purpose other than those specified in exclusive list, nothing but further supply, transportation of passengers, imparting the driving skills, under these three cases, except under these three cases, anything is covered in the blocked list. And another point, another important amendment is, even when demo vehicles are capitalized in dealer's books, it is treated as a fixed asset. They qualify as a capital good under GST. ITC remains available unless depreciation on tax component is claimed under Income Tax Act. So as we know, if the depreciation is claimed on tax component means tax is included in cost of PPE, and they means that is not eligible for ITC. When the tax is included in cost of PPE, only if it is not refundable. In case it is not eligible for claiming the ITC, then only it can be included in cost. So that's why clearly stated ITC remains available only if it is not included in the cost of the PPE. Okay, next. So next one, clarification on availability of input tax credit on ducts and manholes used in optical fiber cable network. Generally, ducts and manholes are integral components of the optical fiber network, and those are never covered under any land, not in the nature of what it is, not in the nature of what neither covered under land and building, civil structure, nor in the nature of telecommunication towers and pipeline laid outside the factory premises. And these are used for providing the telecommunication service and for signal transmission. That's why those are treated as a part of optical fiber network, optical fiber cable, and those are treated as a plant and machinery. So ITC, there is no restriction on claiming of input tax credit. ITC is allowed. These are not considered as a part of the land or building, civil structure. These are considered as a part of PPE, as a capital good. They are eligible for claiming the input tax credits. Okay, next. And the due date for filing the annual return is altered in case of composite dealer. And previously it was 30th April, and now it is 30th June. With effective from 24-25 onwards, it is 30th June following the end of the financial year. Okay. And GSTR 1A. And this is one of the important amendment we have. So, general regular dealer is filing what GSTR 1. In GSTR 1, he consider outward supplies, output GST mentioned. GSTR 3, they considered outward supplies, output GST, inward supply, ITC, net GST payable, nothing but what? Cash, like how much amount required to pay through the cash. These are considered. And previously what? For example, any invoice missed to mention in GSTR 1. Is it possible to revise it? So, no revision is possible, and you may amend it in the next GSTR 1 return. You may amend it in the next month or next quarter GSTR return. You may amend it. Okay. And previously, one point is there. For example, while filing the GSTR 1, you didn't consider one invoice. Say invoice 1 is not considered, the remaining invoices you consider. And while filing the GSTR 3B, sorry, GSTR 3B, while filing the GSTR 3B, and you came to know that one invoice was missed in GSTR 1, so you considered here in GSTR 3B. And accordingly, invoice 1 is not considered in GSTR 1, but in 3B they consider. And due to that, there is a mismatch in the outward supply. And you can rectify that mismatch only in the next quarter or next month, means next period written by amending the GSTR 1, right? and there is no option. You have to wait till the completion of next period GSTR1 only. But now this is clarified clearly, and this was eliminated, and one more thing was introduced, nothing but GSTR 1A. Sorry, GSTR 1A. And in if any GST, when will we required to file the GSTR 1A? Only when, for example, you missed any invoice in GSTR 1, then before filing the GSTR 3B, you may rectify it, or you may rectify it, or you may add that invoice through the GSTR 1A in the online through the common portal, then the outward supplies in GSTR 3B from GSTR 1A directly, and because of this rectification we did, no mismatch is there, that will be rectified. But remember, GSTR 1A can be filed only for additions or rectifications you required for the current period only. For example, January month return is there, and the January month return can be filed by 11th February 2024, and GSTR 3B can be filed by 20th February 2024. 20th February. And after filing the 11th of February, after filing GSTR 1, but before filing GSTR 3B, in between the period, we may file GSTR 1A for giving the amendment, for giving the rectification. But for example, if you miss to mention GSTR 1A in the current month, can we rectify it in the next month? Nothing but in the period of while filing the February month return. Whatever the whatever the error you did while filing the GSTR 1 of the January month return can be rectified while filing the GSTR 1 of February month return through the GSTR 1A. Is it possible? The answer is no. So, before filing the GSTR 3B of January month only, you can file GSTR 1A. Once the GSTR 3B filed, then GSTR 1A will not work. And after filing GSTR 1 of the respected period, then only GSTR 1A will work. Simply said, GSTR 1A will work in between after filing GSTR 1, before filing GSTR 3B. And it means before filing GSTR 1, GSTR 1A will not be activated. After filing GSTR 3B, it will be disabled, not activated. So GSTR 1A should be completed in the current period only. Okay. And here, so provided that the person may, after furnishing the details of outward supply in Form GSTR 1 for the tax period, but before filing the return in Form GSTR 3B, at their own option, amend or add details of outward supply in Form GSTR 1A electronically through the common portal or facilitation center. And GSTR 1A allows the taxpayer to amend outward supply details filed in GSTR 1 for the current period. Okay. Filed for what? Current period. And filing the Form GSTR 1A is optional. It is not a mandatory thing, it is optional. Can only be done once per return period. Once you file the GSTR 1A, you can't be again do it. So once you file, it will be over. Okay. Amendment in GSTR 1A are restricted to the current tax period only and include adding missed details, modifying already declared details, including those from the invoice furnishing facilities from quarterly return. You may be a monthly or quarterly, whatever may be, both will be rectified. Amendment in GSTR 1A affect tax liability, which is auto-populated in GSTR 3B for same tax period. For the same tax period, ITC for supplies amended via GSTR 1A is reflected in the recipient form GSTR 3B. And once we updated in GSTR 1, those are auto-populated in GSTR 2A. And here same thing, GSTR 1A is auto-populated directly in GSTR 2B also in the subsequent tax period. GSTR 1A can only be amended electronically or through the common portal through the facilitation center. For monthly taxpayer, GSTR 1A is available from the due date or actual filing of GSTR 1 until GSTR 3B file. And in case of quarterly return mode, and GSTR 1A become available after quarterly filing of GSTR 1A and is open until filing of quarterly GSTR 3B. Okay. And clearly say monthly or quarterly, whatever may be, after filing GSTR 1 and before filing GSTR 3B, only GSTR 1A can be activated and you can file. And GSTR 1A has no fixed due date but is limited by filing the timeline of GSTR 3B for the same tax period. For the same tax period. Okay. And next one, invoice wise the details of interstate supplies to the unregistered person in GST return. In case of interstate supplies, invoice wise the details so is required to be provided. So it is required to be made to the unregistered person. Form GSTR 1A has been reduced from 2.5 lakhs to 1 lakh. And previously it was 2.5 lakh and now it is reduced to 1 lakh. And exemption from filing the annual return. Registered person with aggregated turnover up to 2 crore in the financial year 2023-24 are exempted from filing the annual return in Form GSTR 9 for that financial year. Okay. And this is the end of the session. And I hope you understood. Okay. And so just please go through it and I will update this PDF in the Telegram channel also. If you have any doubt, just ping me in the Telegram channel. I will reply. And before that, please like and share the video so that it can reach more people. Okay. Thank you.